I remember just struggling with the calculus side of economics. I was just awful at it. And I
Fun
just
times.
remember going, I hate this. Like, I hate this so bad. And I was talking to some people who they were just retired. They made they made like tens of millions of dollars over their life in real estate, and then they just and I'm like, so I'm in this crossroads.
Let's go.
Adam, hey man, how are you?
I'm good. I figured it out.
Awesome. That was super quick. I'll tell you what, it's getting quicker and quicker. When I first started doing this, I would literally talk for 5 to 6 minutes of just shit just before guests figured out. So we've done well.
Yeah, you're. It helps switch up the mobile.
So yeah, everyone at home, Adam Fenner is an absolute tax whiz. So yeah, really excited to have him on the show today. Learn some things, get schooled. So yeah, Adam, thank you so much for coming on the show, man. So yeah, how did you get into it all? Was this something that you were passionate about in high school, or did you kind of fall into it in college and then you really enjoyed it? How did that come about?
So I'm a little bit different in the how I kind of got into accounting. I wasn't even thinking about accounting until I was like 30 years old in college. I didn't know what degree I wanted to go into. Picked arbitrage
Yep.
after switching majors about 6 times. And I remember I remember just struggling with the calculus side of economics. I was just awful at it. And I
Fun
just
times.
remember going, I hate this. Like, I hate this so bad. And I was talking to some people who they were just retired. They made like tens of millions of dollars over their life in real estate, and then they just and I'm like, so I'm in this crossroads. I take accounting classes because I wanted to get a bachelor's of science, not a bachelor's of arts, so I had to take accounting classes in the middle of it. And I'm like,
Yep.
I hate economics. I love it conceptually, but I hate the calculus side of it. Like, what did I just figure out after this complete whiteboard covered in crap? And taught by an
Yeah.
like as much as I had fun and I learned a lot, I was taught by an Italian guy and I barely could understand him, and there's still some words that I can't not hear in his voice. And so I was talking to them and I'm like, this is where I'm at. I'm terrible at this. I'm really good at this. What do you think? And they're like, I don't know what you would do with an economics degree, but I know exactly what you would do with an accounting degree. I'm like,
Okay.
all right.
Some sound advice. Yeah.
And so that's what I did. I went into accounting and then graduated like a year and a half to 2 years after that. I had the accounting field, there are parts of it that are very, it doesn't seem like it, but there are some parts that are really, really heavily recruited. So I ended up in a part of accounting that was very heavily recruited. And so I somehow managed to be competitive, which surprised me. Like, even the recruiters, when they're like, okay, we're going to offer you a job. And I'm like, or they're like, we're excited to offer you a job. I'm like, you're excited to offer me a job? Like, I was completely. So a year out of college, I had a job. And so I went in and I ended up in one of the big four firms. Time that it was time to do that, and ended up moving states.
Hey, Adam, I'm sorry to cut you off there, but just with the internet, it's just dropping out a little bit. I'm just wondering, are you close to a modem by any chance?
I can be.
If you could, that'd be awesome. Thanks. Because, yeah, I kind of
figure out
missed
what the
half
deal
the
is.
last bit. So if you're able to, that'd be awesome. Because, yeah, this is a really interesting story. So I'd love to hear
We're gonna take a
it.
journey. We're gonna take a journey through my house then.
Cool. All right, sounds good. With the VIP tour.
Yeah, right.
So, yeah. So for everyone tuning in at home, Adam Fenner is an absolute tax whiz. We're basically just going through his backstory in regards to how he got into it. And yeah, it's quite interesting that he's studying economics. Yeah, Amanda says hashtag house tour. So thanks for tuning in, everyone. Hey, Barbara. Yeah, so basically, yeah, what we'll be doing is in a moment after we get the VIP tour of Adam's house, and we're going to get back into how he started in accounting, and then we're going to learn some real valuable knowledge in regards to taxation, because I don't know about you, but I really need to get schooled on that subject. Now, this is for US tax, but there's certainly some value that he can apply to pretty much universal population. So, yeah, thanks for that, man. That's even just the picture's heaps clearer as well. So, fantastic.
Cool. All right. So as long as it's better, I'm
Yeah.
downstairs, so there might be a little bit more background noise with my wife and kids.
Oh, that's cool.
So, so I just don't know how much of that actually came through pretty clearly.
So it was really
I
a
started out,
choice of economics or accounting, and then yeah, we went from there.
Okay. So I ended up in a big four firm. I did that for about a year and a half, and then I decided it just wasn't time. It wasn't where I wanted to be anymore. And transitioned over to kind of my own thing. Found a group of people who were supportive of that, and that was really valuable. Anybody who knows starting your own business, it's important to have a support group, and I found that.
Absolutely, yeah. Yeah, I learned that the hard way. I always try to do things on my own, and then yeah, I really found the support group was actually the really thing that helped with growth. Yeah, it was much better. So yeah, I definitely agree there.
And it's about it's not just about having a much better network. It's about having like a family support network. People who are like,
support.
Like, why don't you just get a stable job? Like, I do have a stable job, but then in addition to that, that additional time that comes from my support network at home.
Yeah,
but
yeah, that's awesome.
So I'll start off by kind of sharing some of the stuff that I've been getting asked a lot of questions about. And these are things that can apply to anybody's level where they're at in a business. The first one is 1099s and W-2s. So in the American tax system, I don't know how it is in the Australian tax system. We've got, there are two different types of employees. And we've talked about this a little bit when we're talking about independent contractors and using virtual assistants and stuff like that.
Yeah, with offshoring. Yeah, absolutely.
Now, it doesn't really apply necessarily to the offshored employees, but when you're using an American independent contractor, you're going to most likely put yourself into a situation where you're going to be using the 1099. And there's a clear line, but it's not very clear for what does and does not constitute them being an independent contractor. And that's where a lot of the gray area comes in, because it's really, really favorable for the business to use an independent contractor. People want to they want to reduce their bills, and one of the ways to do that is to shift the entire tax burden onto their employees, to not pay them any benefits, and it's not like necessarily, I wouldn't call it unethical, but the way that people have done it has been unethical, and that's created a situation where
it's a bit dodgy.
The Department of Labor and the IRS now work together to kind of track those items down and say, okay, that person should have been an employee. You're taking advantage of them. You're not only going to have to pay them back taxes and all this other stuff, you also get paid a fine. You get charged a fine. There's a couple key ways that I kind of measure, okay, is this an independent contractor or is this an employee? If they're an independent contractor, they need to be in control of their own schedule and the work they do. There's a difference between saying, I need you to write me some blogs. I need you to build me some content or develop a software or whatever. There's another thing to come in and say, this is what you're going to do. This is how you're going to do it. This is when you're going to be doing it. So that line of their independence and how much control they have over creating the product or doing the service that you've asked them to do is really important. If they can go work for other people at the same time. So they're a W-2 employee if in addition to working for you, they are not allowed. So it's like, okay, you can work here, but you also are not allowed to work anywhere else. If that's the nature of the situation, you're going to be in hot water if you're still calling them a contractor, because they're not a contractor. They're your employee and they have to work there, or they can only work for you. It is, that's kind of those two are the big ones. The how much control do you have over these people, and how much can they go work for anywhere else? And the IRS doesn't care.
That's an interesting point.
Independent contractor contract. They don't necessarily care about the nature of the agreement. They care about the nature of the relationship. So you can say, I've got a contract. It says right here that they're an independent contractor, blah, blah, blah. And it's like, well, they're not though. You don't
Yeah.
treat them like one, so they're not, and you're going to get in trouble. And especially when
Yeah.
you're
Okay.
talking about a lot of the, a lot of businesses like that we kind of operate with, those are the nature of the relationships that we tend to run into a lot of, because a lot of us are still starting off. And so we're using those independent contractors to fill in gaps because we're just not ready for
Yep.
an employee yet. The way to take care of that is, so this is the part where there's tax forms, and this is the part that the business owners need to know to stay in compliance, is if
Yep.
you have the 1099 contractors, you need to make sure that information, they need to get their 1099s by December or January 31st. So
Okay.
if people are like, well, I wonder, April 15th is the deadline. It's like, no, that's the deadline for filing. These people are required to have their stuff by January 31st. The way to get the information that's going to need to fill out on that form is you request a W-9 from them. They fill out the W-9.
Yep.
You take that information, fill out their 1099, send it to them before January 1st or 31st, and you're good. You can't like write out some stuff on your Microsoft Word, fill out the template, and mail it out. It's got to get filed. So you're going to need some software. You're going to need something to help you out with it. But getting that done and getting it done soon is going to keep you out of hot water with the IRS. For those of us who are affected by the IRS.
Yeah, no, that's really interesting. Like for those listening in at home that, are thinking of getting employees or have them, that's a really valuable point to make, because in Australia we have it vastly different, where you can be a contractor and so some of it's similar, but we certainly don't have W-2s and all that sort of thing. So that's really helpful for those at home that maybe think about getting employees.
Cool. What do you even have for that type of thing? Is that even an issue over there? Or?
Not
I'm just curious.
really. So what we have, so we got an ABN, which is the Australian business number. And then we've got a TFN, which is a tax file number. So if you're an employee, you use your tax file number. And then essentially what happens is employers will pay through using your TFN, they'll basically just pay you, and then they'll put the tax aside for you. Whereas if you're a contractor and you're working through your ABN, you still have to hold a TFN, and your business will still have to have a TFN as well. But you'll basically have to put aside your own tax, and then it's a case of then your own boss as such. But then it does come down to if you start to working for someone, you're doing 40 hours a week. On our end, for a lot of industries, and I don't want to say this for every single industry, but from the industries I'm aware of, say like with business contracting and things like that, you're still just an independent contractor, even if you're doing, say 30 hours a week, 35 hours a week. But at the same time, it's all run through your business. But over time, what happens is if you do run an independent contracting business, but you're then starting to do that same amount of time, they've started to shift the laws, and they may have shifted them recently or last year or two, where it's now a case of you have to, as an employer, you now have to start paying them sick leave, annual leave, things like that. So they're essentially, it's kind of the same as what you're saying, where if they're an independent contractor and they've become almost full-time, then they're deserving of those full-time benefits. The government will really look at what they feel is kind of in which category. So Amanda says, apparently my last boss reported that I worked about 170 hours in Q1, but I was laid off December 2016. I didn't work any hours. The only paycheck I got was from the back pay. Yeah, Amanda, that's really bad. So, I mean, some people are dodgy as, like, I remember when I was early 20s, like I'm talking, maybe like, I don't even know, like 2021, there was a job I did, which was, we were technically independent contractors, but we weren't. This is like well before the laws had been changed. And it was all just cold sales. So as in, it wasn't quite door knocking, but it was a similar effect because, aside from web design, my background is sales. And there was one girl that she left and then she went on government benefits, and the government then asked her for a statement for her previous work at this company. And then the guy had filed a form that basically said that she'd worked something crazy, like 70 hours a week or something silly, whereas she was doing like a uni student, so she was like part-time, like 10 hours or 15 hours, and making $5 per sale. So if she made 4 sales in an hour, there's only $20. So some employers can be really, really dodgy. So yeah, it's good to know your
That's why this
rights
stuff
as an
is there. It's
employee,
not
as
there
it
to get all
were.
the.
Yeah, exactly.
Yeah, it's there to take care of people on both ends. Not always the employers, but it's more to take care of the employees.
Yeah, yeah, exactly.
Um,
Oh, that's awesome. Yeah, that's really good to know. Thanks, Adam. That's great. So, I mean, for just say, yeah, for those that are looking to get employees, and that's fantastic to know about the forms. So, how would that go in regards to say a financial aspect in regards to what you then do with the employees? Like, because obviously, if they're independent contractors, they've sorted themselves out. Perhaps let's go into the if you are an independent contractor, what would you really be looking to do in regards to your taxes and that sort of thing?
Um, so I always recommend just going with if you've got the point where you've got a lot of employees. Amanda, that's awful. It sounds like they really took advantage of you. Did you pursue anything after it was done? Something to kind of make sure that you're not on the hook for all this or anything like that?
Yeah, man, just let us know because yeah, we do. Yeah, that's really we want to make sure that everything's all right on that end. So, yeah, did you look into that? Because we obviously want to make sure that no, okay. Well, as long as you're on the hook for anything, that's the main thing. Like if you've done a bit of research and you're not viable for any sort of fines or anything, then that's fine. But just double check that.
Okay. Um, so the my brain just ran off.
That's all right. Everyone at home, Adam's a bit sick, so he's actually done amazingly for still coming on the show today. So thank you so much for coming on. Well, maybe instead of as a subcontractor, perhaps as an employer, that might be more receptive to this
Oh,
group
that's
as
right.
such. So if those are looking to have employees, what would you really recommend? Or say, yeah, contractors.
Oh, so these guys didn't, you haven't seen the impact on your taxes for 2017 yet because you haven't gotten all the stuff yet, or are you just you're waiting on W-2s? Oh,
Yeah, okay, yeah. So I think it's still within that tax bracket that she hasn't seen the outcome yet. All right. Well, Amanda, just keep very vigilant of that because yeah, it sounds like you could potentially be in a bit of strife.
okay. Yeah, just that's my advice is if you haven't seen, if you're going to pay taxes on some cash you haven't gotten, I would go to so this is something I will say about the IRS, and most people will not say nice things about the IRS. I have found them, one is that's one of the most unwanted jobs in the accounting field. They get treated poorly.
Yep.
They're just beaten down every day by people who just hate the IRS for kind of a lot of good reasons. But I will say that I've never called and had an unpleasant experience. And I've called with hey, I don't know what to do. Who do I need to talk to? Can you please help me? I think
Okay.
this is weird.
Oh, that's
And they have
great.
directed me to
Yep.
resources. So if you get a W-2 from them and you're on the hook for taxes that you didn't pay, call the IRS and be like, this is what happened. I, I got laid off in December of 2016. This guy's telling me I got paid or I'm on the hook for taxes in 2017. I never worked for him. Who do I talk to? What do I do? And the
Yep.
hope is that they're kind and they point you toward a resource, or they say, oh, okay, and then they can go pursue that on your behalf. But I would start with them and
Awesome.
see what they
Yeah.
recommend if you get a W-2 and you're on the hook for taxes. Um, so if you're an employer and you have full employees, I always recommend using tax software. The reason I recommend having tax software is that, or not tax, payroll software. Payroll software, think of it like in this regard. Even an accountant who spends all their time learning about accounting and all the other stuff, their payroll is more of a human resources and a legal thing than it is an accounting thing. So it's just this complete niche that you need to stay on top of, constantly stay up to date on. So unless you're actively going
Yeah.
to pursue the information, or you've got a group that comes to you and chases that information down for you, like some sort of a professional membership group. And again, why would you do that if you're an employer? You've got other problems to worry about. Go with some tax
Yeah.
software, QuickBooks Payroll. You can go as far as like the full, let them do all the thinking. All you do is punch in time and make sure the employee information is right. Um,
Yep.
because they're the ones who are going to stay on top of and may potentially, if you get that package, pay for the taxes on your behalf. That way you don't have to worry about every month, every quarter paying taxes. They file forms, they keep up to date on everything, they do direct deposits for you. Um, See, Barbara had a good experience with the IRS. I've even had a good experience, and I owed them money. Like that was for my 20s.
Okay.
That was pre-accounting, but
Yeah.
the
Yeah, it's always pre-accounting you owe money. Standard.
life happens. It was like $30. I had like a refund of 120, and they're like, "Oh no, son, $30." And I was like, "Okay."
Oh,
Like I'll take care of it. And so I let the accounting software take care of it because you're going to have federal taxes. You're potentially going to have state taxes. I'm from Nevada, so we didn't have state taxes, but we still had like state filing requirements. There's in Arizona, they do have state taxes. Most states do have state taxes. Like I think Arizona, Texas, and there's like one or two more that don't have state taxes. So if you're lucky enough to be in one of those, you don't have to worry about it. But you still have all these groups that you're beholden to. You have to withhold that money from their paychecks, and it just gets to be really complex. And as a business owner, your time is valuable. So I just recommend going with some sort of a software expert package and letting them do all the heavy lifting on it. ADP, I haven't had poor experiences with ADP, but there's some limitations to their stuff because of QuickBooks integrations and stuff like that. They're working on it, but they just weren't where we needed to be. And so we've been pretty happy with QuickBooks Payroll and using that. But for the most part, but QuickBooks Payroll cannot do wage garnishments. If you're in a situation where you've got an employee who owes child support, which seems like that's a normal thing. QuickBooks doesn't cover that because child support can be so complex. ADP does it. QuickBooks Payroll will not. So it's just the thousands of groups that they need to owe money to. It's just too much for them, and they're like, "Yeah, we're not worried about that liability."
That's fair enough.
The more informed you are, the better. But I recommend passing the heavy lifting off to an expert, letting them focus, then letting their people like get all those brochures and all the updates and track the updates and interpret the updates and get it all right for you. But it can be a pain. Payroll is its own unique thing, and it is hard.
Yeah. Well, yeah. I mean, it's an entire industry in itself. Like, there's a lot there, and when it comes to numbers, a lot of people can be overwhelming. So certainly, this is great. But yeah, for those that do have extra things within their tax, and certainly, see a professional like yourself. That's great advice. So Patrick's asked, so Adam, I've got a friend that gets paid kind of under the table, but has made at least 2 to 3K over a bit of time. Does that raise a bunch of red flags for his audit? His employer says it doesn't. Is it cash, or is it via bank transfer?
Okay, so because I'm being broadcast on this, I am going to tell you that the right answer is to go with to Amanda's point, I prefer it that way. I can give you guys what
if
you're
the IRS
for.
is watching, this is what I recommend.
If the IRS is watching, and this is the right thing to do, is to file a W-9 with them, get a 1099. The limit, and I should have said this earlier, the limit is $600. If they paid you less than $600, don't sweat it. If they paid you $600 or more, you need to have a 1099. Things that will increase your audit risk are things like over-the-top deductions. You have like your miscellaneous deductions. If you've just got an extraordinary amount and you can't justify it, the thing is, if you get audited and you can justify everything, then and that's just, are you neat? Are you organized? Do you have all your receipts? You can say, okay, well, the reason I have $10,000 worth of mileage is because I drove 10,000 or $10,000 worth of mileage and expenses on my vehicle, and you can prove all of that out. They're not like, an audit just means they're going to ask a lot more questions. An audit doesn't mean you're going to get slammed with all these things. So if you're prepared and you can justify everything, then go for it. But a lot of additional miscellaneous deductions, there are limits to what transaction sizes will trigger within a bank account. And then again, the thing that will happen if you are audited and they like, whoa, here's $2,000 that's not on your thing. You're going to pay the taxes on that. You're going to pay the interest for the late fees regarding that, and you may pay a fine. But the hope would be that none of that adds up to more than that amount that you get received, like that's the one. Like, let's just hope we don't pay $4,000 worth of penalties on $2,000. But you're also, that's generally the way that they're going to treat it.
Grant's got a question. Hey, I'm looking for an accountant that deals with internet-only companies. We move a lot, laptop lifestyle, and curious about the possibility of potentially filing in a state. Now, Grant, I can't see the rest of that. Adam, if you can, I've just got little dots after I assume the word state.
Yeah, me too. I had to switch to my phone to be able to get this going, which made my trek downstairs.
Yeah, Grant, if you're able to maybe just copy and paste the last bit of that, just because we got to, we move a lot, laptop lifestyle, and curious about the possibility of potentially filing, and then the rest, if you could add that in again, that'd be great.
I'm willing to guess, and so is your business incorporated through any state?
So just waiting for Grant to respond to that. But yeah, in regards to the amounts that come out, like I had a friend that worked in a bank through basically fraud, and he would be his job that if there was any, say, 5,000 or above amounts that came through, he would then have to research that and call the people and figure out what's going on. And it was very common that people would get, say, $3,000 a week put into their account, just repetitively $3,000 a week, and they couldn't explain where it came from, and then be like, "Yep, drug dealer," and then obviously they'd be launched an investigation and all that. So, yeah.
Right. There's been some. I started in economics, and it's because I like it conceptually. I just don't like calculus. So there has been some sort of a push, and it's not a huge one, but I think it's a Freakonomics episode where they actually talk about why they should get rid of cash, and the reason is because the bulk of okay, I'm with Grant. So the bulk of cash transactions are actually tied to drug and illegal activities. Like the standard mom and pop doesn't operate on hundreds of thousands of dollars. Like, they don't know where the bulk of this cash is sitting. It's just the physical cash. Like, they know where this digital currency is, but they don't know where the physical cash is, because I think there's more digital than there is physical currency or something like that. So there's there's a push toward removing cash because it's criminally related. Patrick, I'm not going to tell you not to worry about it, because that I really can't. But I will say I've heard limits like what Ross said, where it's the 5,000, 10,000. I've heard of those. Continuous irregular activity is what's going to trigger something. And you can have, there are like, the right answer is anything over $600. But that's my answer.
Yeah. Well, at the end of the day, if you get handed some cash or someone owes you money and you put it back in your bank, you're not going to get penalized for $200 putting back in your account, So if it's tracing back to your employer has given you that, or they paid, say, although, it's under the table as such, but then the employer then has to say, well, I've had a loss here, and then it comes back to say, the loss is because I paid an employee the $200, then that's really just, that's hot water to be in.
Yeah, it's fuzzy and all that stuff. I don't have a good answer for you, Patrick. I would say if you were an American citizen living in a foreign country, then your income would be taxable in the foreign country. I'm pretty sure that's the way it works. International taxation's ugly. To Grant, because I don't want to forget you, I would take a look at your state taxes in Maryland. I think Maryland's I can't remember if Maryland's a really good state or not. I know that part of the country Delaware is really, like, when you talk about like the thousands of shell companies that exist in the world, Maryland, or no, Delaware, they've all got it. And it's like this funny little quirky thing that they came out with, how the address for the companies for like Hillary Clinton and Donald Trump were the same one, because they're both through some sort of registered person. And this is this house that has thousands and thousands of shell companies that go through it. So I would say pick Maryland, because it's an easy justification for where everything is kind of out of. The bulk of your stuff is going to be service related. So your revenues are going to be service related. You're not going to have a lot of cost of goods sold, And since you're not moving a physical product, you're not going to be in a situation where you have to worry about stuff moving from one state to the other. Now, I would say that if you find yourself in a situation where you're incorporated in Maryland, but you've spent 75% of your time in Colorado, you should consider paying state taxes in Colorado, because that's where you're operating your business out of. But if you're traveling a lot, but your base of operations is in Maryland, then just keep it in Maryland and call it good. I try to simplify it, and my advice tends to be conservative. I'm not like this crazy tax strategist who's going to like do all types of wild stuff. And I'm going to try to, like, if you have to answer to the IRS, they're not going to go, okay, this all looks fishy. They're going to go, seems reasonable.
Yeah, exactly. Well, especially when you're being broadcasted, conservative is good.
I don't know if that's, I don't know if that answers your question, Grant.
For everyone at home, are you guys able to, or anyone there? Because Google did the same thing. They had a shell company. Are you able to Google for us where Google is based? Just for that, that'd be fantastic. So yeah, the live listeners out there, thanks. Because I'm quite interested to know, because I remember reading a piece on it that Google. Sorry, Adam, what was that?
Yeah, sales tax. There is no sales tax associated with service companies, but you are going to pay income tax somewhere. I don't think you have any crazy complexities. As an internet business, you're going to have cost of sales, and that's whatever you need to purchase to be able to provide the service that you do for others. Your stuff isn't going to be overly complex. So I would say any average accountant is going to be able to cover your stuff. There might be some that cater toward your niche and might have some higher value items. But you're going to be, I think you're going to be, I think you could walk into any accountant and say, this is what I do.
Okay, no, that's good.
That's what.
All right, so Google is based in Cali. All right, thanks, Amanda. Oh, the group reincorporated in Delaware. Well, there we go. Yeah, so Delaware.
Right. Same house as Donald Trump and Hillary Clinton.
Yeah, all on just 3 different doors for one room.
Right. I would, for a business like that, it's a little bit more hazy, because they're in a situation where they've got an Apple store in every mall in America. They've got, like, where do you really say your hub of operation is? So at that point, it's about determining it. Yeah. And so they get that added flexibility. When you're an internet service company or an internet-based company like Grant is in, wherever you are is where the bulk of the activity is taking place. But I would be safe, and I would just file in your state that you're in. But it's going to be state income taxes. So. Yeah,
fair enough. Patrick says, hopefully all the incorporation emails don't get deleted.
That's funny. I'll stay out of that.
Yeah.
Right. They've got to go somewhere. But when you're
corporate HQ has to be somewhere for those big companies. Really are.
And there will be companies that'll, I know we're going off track, like none of this really helps anybody here, but there will be companies that.
No, but this is good. Like, this is part of the show. Like, we just tend to like drift off at parts. Like, it's good. Like the other day we were talking about video games, so it's interesting.
But they'll have like, okay, well, our services, like they'll make some sort of a designer hub in Ireland, so they can keep a lot of their cash in Ireland. When you're talking like one of the big deals with the American tax reform that just came out, whatever they called that bill, I should know the name, but I think it's fuzzy and political, and I just don't care that much. So one of the things that they did is they created a one-time tax benefit, or not a tax benefit, basically a tax penalty to bring all that income, that taxation back into America. And that is like, if you get, it's my understanding, because it's really, really messy. If like if you're providing a service, you're providing a product, whatever, and that's in, let's just say Ireland, and Ireland's tax rate is 20%, but the American tax rate is 37.6 or something like that. You still will eventually pay that money to the American government. but you only have to pay the difference between the 20 and the 37.6, so it's 17.6. So you'll pay that difference, but only when the cash comes back to the country. So when you got companies like Apple who had literally billions of dollars sitting in Ireland, like not paying taxes on it, it's just going to sit here. And the American government's
Yeah.
like, well, what are we going to do? They need to bring it. Like, why? Why would they bring it? They're a business. They're about holding on to cash. So
Yeah.
what they did is they brought in this one-time tax penalty, and I can't remember what all the numbers are, but if you're bringing in like non-physical, like there's income that's taxable that's non-cash, and then there's like cash income. So if they bring all this income back to, like, if you've got a subsidiary in this foreign country, it's paid the foreign taxes, but it hasn't paid the American taxes. If you brought that over and it's like cash related income, then those would be taxed at this lower rate, and then they doubled it for the higher rate, but it's still much better than it was before. So there's companies already, I think Goldman Sachs came out and said, we're going to take a big tax hit this year, but it's because they're repatriating this income. And because they're seeing, like, that's Goldman Sachs. When they make a financial decision, it's an educated one.
Yeah.
So
Okay.
those are the kind of the impacts of that bill and all that other fuzziness.
Yeah. Oh, that's really interesting. Yeah, because it's remarkable what they can do.
Oh yeah. So this is another one that I've gotten, and I think a lot of people have found this incredibly valuable, is
Yep.
it's what's called cost accounting. And the cost accounting is basically you figure out how much expenses truly go into every product or service you provide. If you're in a business with like Grant, it may be a little bit harder. You could do it, but it's still he's not producing widgets. He's not producing a physical product. But when I talked to a t-shirt guy, he makes t-shirts. He was like, dude, I'm hemorrhaging cash. Like, I'm dying here, but I can't figure out why. So we went through and we did this exercise where we took his income statement, and it was real basic ratios. I said, okay, well, your revenue is this, and then everything else is this. And I said, okay, well, if you manufactured 10,000 shirts this year, and you had, I'm going to get the math wrong because I'm doing it all in my head. That's funny. Then you probably don't have a product to sell or anything like that. Do you actually sell like physical goods to people?
I
Like you're
believe it's
selling,
predominantly
you're saying better body, so I'm thinking supplement, fitness, and
training,
personal
so like
training and stuff
personal
like
training.
that.
Yeah. Yeah,
Yeah, and if
Grant's
you're
ripped as
moving,
shit. Like,
I'm not. But why would you expect that from the accountant? Um,
uh, yeah, I really feel I need to be in better shape than
so,
I am. Yeah, consulting. Okay.
uh-huh. Um,
Yeah, Grant just gets
the
people swole.
funny. So what we did is we went through this exercise, and it was slightly more complex than this. But if you want a ballpark figure, you provide a service, you provide more. It's more product based, but you could do it for a service too. Is you look and you say, okay, well, I've produced 10,000 widgets. It cost me, and you look at every expense. And when I say expenses, I mean every single thing that went out the door. I'm not saying like, well, we don't really count interest. We don't really count. We don't really count. Like the money that we paid to the postman and all this other stuff. I'm talking everything gets into this calculation, because where else are you going to cover those costs? It's not like those costs get covered magically because they're slightly less important.
Yeah.
You break the costs into two little groups. I'm pulling my fingers up as if anybody doesn't recognize two. The first group is going to be the stuff
Thanks.
that's a per item basis. So for the t-shirt guy, it was t-shirts. You can't produce a t-shirt without a t-shirt, so you have to have a t-shirt. But then there's also, so those are the variable costs. So the more t-shirts you make, the more t-shirts you have to buy. And then there's also fixed costs. Like if you made one shirt or you made 1,000, you still have to pay the power bill. Like there's no getting around
Yeah.
that. So those are what's called fixed costs. So those are the costs that are not related directly to these expenses, these products. But you need to account for them. The selling shirts keeps your lights on. And so as you're going through this process, you break those items out. So things like rent, power, any loans. I calculated into the income statement isn't going to capture things like loans. It's not going to capture things like any credit card bills or anything like that, because those aren't always attributed to expenses. Sometimes those are attributed to, my daughter wants to see what's going on. So those aren't always going to get.
What's your name, sweetie?
Those aren't always going to get. What's her name?
Elena.
She's being
missed
shy.
that.
That's Elena.
Yeah. Hi, Elena.
I'm the daughter.
Yeah, you're a goof. All right, let me finish.
She calls me. I call Nana.
Hey, you're being rude.
That's great.
So, Amanda's got some. The trick is the thing is with all of it is it's an estimate. You can get close. Like there are companies that have got experts in this and they really, really nail it down, and then it's not an estimate anymore. But at the end of the day, there's going to be surprise costs and there's going to be all these other things. But if you can get these numbers done right, you see the little fingers in the back. And so if you can get these numbers done right and figure out where you can reduce costs. Alex, go play. You can figure out where you can start improving and start improving your bottom line. Because there's 3 ways you can improve your bottom line. You reduce expenses, increase volume, or you can increase the price. That's not the only 3, but those are the big 3 levers you can pull. And yeah, okay. Drew, she's cute, but she's a monster. And so if you can figure out, in the example of the 10,000 t-shirts with $100,000 worth of expenses, like not all of those were attributed to it. So we broke them down. We said, okay, these are directly related to t-shirts. These are directly related to everything else. These are the fixed costs. And we, yeah, I saw that, Amanda. He's a brat. So you've got you say, okay, well, you separate them out. Let's just say it's, for the sake of argument, of the $100,000, it's 70,000 is attributed to variable costs. The remaining 30 is related to fixed. You need the fixed is going to be where it gets in the fuzzy gray area. You can directly say that this 70,000 is related to variable costs. So the 70,000 divided by the 10,000 units, that's about, I think, 70. My math might be wrong. It's expensive shirts. Or it's $7 per t-shirt, and then you take the 30 and you divide it by the 10,000 again. But the thing to remember is if you increase your volume, those expenses don't go up. They're just going to remain the same. So you kind of provide this broad estimate. So you're like, okay, well, now it's $3 per t-shirt for the fixed expenses. So if you can kind of do this rough calculation and say, okay, well, I figure it's $10 per t-shirt to go out the door if I want to cover all my expenses. And if you look and you're like, well, I made $111 or $110,000 worth of revenue, then you're like, oh, well, I make $1 a t-shirt. Your average price is $11 per t-shirt, and so you make $1 per t-shirt. So maybe you need to increase the price of your t-shirts, maybe whatever it is. If you're in a situation where you're like, okay, well, none of that makes sense, something's missing here, then maybe you could dig in and find some more. But now you can calculate kind of capacity issues too. And yeah, right. Patrick's criticizing my math skills. I do all my math in Excel, so that's my alibi. But when you figure that out, you're like, well, I feel like with the 10,000 t-shirts, we've been operating at capacity. So can you increase at all? And now that you've got this information that can help you actually increase volume or increase your better plan for the future. Can you plan for growth? If you're like, well, based on this, we've been working 7 hours a day directly manufacturing t-shirts. I don't think we can work more than that, or whatever the case may be. You can make these determinations on how you can increase capacity. Is it a machine limitation? Is it a people limitation based on your staff? You can start identifying those areas where you can increase, you can do something to increase your capacity for production so that you can better make decisions and actually plan. Maybe it's a machine limitation. So now you know, okay, well, I can only manufacture 10,000 shirts at my current capacity, even if I hired more staff and did all that. So that's no point in hiring staff because that's not going to help. It's the machine limitation. And you start to identify your limitations. And based on those limitations, now you're going to be now you can plan and actually project out. In their case, it was they were getting some new machines in, so now they've increased production, and it's been this really great opportunity for them. Hey, I'm on the phone, buddy.
So everyone at home, Adam Fenner is an absolute tax whiz. We were just going through some maths before, so I'd love to hear from you. Hashtag mathemagician for all. Shout out to all Adam's math skills.
I believe I opened this up saying
he just gives me this stern look. But no, this has been fantastic. This has been great. It's been very helpful. For everyone at home, even for someone that say isn't US based, it's been very helpful for learning about hiring employees and having say business contractors and that sort of thing.
The living room is not safe, apparently. So, I'm trying to think. Those are my two kind of big topics I wanted to cover. Is there any questions that anybody else has that they want me to answer while I'm here?
Because they've been fantastic. Like that's been really good insight into your field. So it's been great. Well, Adam, that. Really appreciate you coming on. It's been like absolutely fantastic. For those listening in at home, how would they get in contact with you to utilize your services? Because you've obviously offered some great insight, and I think they'll be really beneficial to reach out to you. So how would everyone at home do that?
Well, the easy way is you've got my profile. You just connect with me on Messenger. I'm easy to find right there. Yep. And Alex, you're being rude. So I would say we're on Facebook. Hit me up on Facebook. I'm easy to find there. I've got a website. And then once we're done with this, I had all the links up on my computer, and I was going to share them in the comments.
Awesome.
Be really proactive.
Yeah, awesome. Yeah, in the comments, drop them all. Yeah, fantastic.
So I'll drop my main place that I'm sitting at is Facebook, but you can hit me up on any of the other social medias. And I've got a website. It's wilsonlakeaccounting.com. I've got a business page, and it's the same thing, Wilson Lake Accounting. And
yep.
But
she's cute. Yeah. No, that's great. Yeah, absolutely. If you could drop all of your links in the comments, that'd be fantastic.
And generally, my kids aren't bugging me during this stuff, but living room's kind of hard to hide from them.
Yeah. Yeah, no, it's cool. So everyone at home, so Adam did us a huge favor and he moved rooms just to be closer to the modem for the internet connection to offer this fantastic value. But in doing so, then it's a jungle out there. All the ones running around. But if you got some value from this, we'd love to hear from you. If you're able to type hashtag value, just like Amanda's just done, we really appreciate that, just so we know to keep making videos like this. Adam Fenner, this has been an absolute pleasure, man. I really appreciate you coming on the show. It's been great. So yeah, absolutely. Drop all your links below so everyone can get in contact with you, because I think that you're going to be really valuable in their journey of tax. So thanks so much for coming on the show.
And it was great to be here, even with all the distractions that I had. I had a lot of fun. I hope you guys got a little something out of it. Amanda, I hope your situation works out. Like I said, talk to the IRS. They're far more friendly than I always go in super like friendly, and because they're having a hard time at everything too. And then for Grant, like I said, stick with Maryland. Just make your life easier. Any complexity is where problems start to happen. So, yeah, and if you guys have any questions, just hit me up. And I'll do my best to answer your question or find a resource to help you guys out. And remember that accounting isn't just about tax. It's a lot of business advisory. There's a lot of additional stuff, and that's really where I have a lot of fun, is doing the business advising, helping with growth and that type of thing. So.
Awesome. All right, Adam, thank you so much again. So Adam Fenner, everybody, and thank you for investing your time with us here today watching the show. So thanks, Adam, and we'll keep in touch, man, and we'll chat soon.
Thank you, Ross. I appreciate it, and best of luck to you guys. If you need anything, let me know.
Thanks, Adam.